Hello, everyone, and welcome back to Luxxfolio's channel. We're sitting here once again with Dean, and we just wanted to have some dialogue about investing versus speculating in cryptocurrency today. Dean, how are you feeling?
I'm feeling pretty good.
Good. Awesome. Yep. So let's kind of dive in a little bit. People get kind of confused. I noticed you get new blood coming into the crypto market, which is great, right? It's good to see new people getting involved with investing and speculating. But I think we need to draw a line kind of in the sand here and try to explain stuff to people in relation to investing and speculating. So when you are buying, let's say you're trying to buy a portion of Bitcoin, a portion of Ethereum, Litecoin, XRP, kind of pick your poison. You're not necessarily investing in them because investing implies some sort of underlying asset behind them. What you are really doing is you are speculating on a currency, which is which is something people have been doing for a long time in the Forex markets, right? But it's not the same thing as investing, which implies there's an underlying value or asset to it. So I guess an easy way to kind of bring an analogy into it would be, say, let's say looking at a horse race track, right? You can gamble, you can bet on a horse. That would be considered gambling. You can speculate by buying a horse. The horse may or may not make you money, or you can invest by buying a horse racetrack, if that makes sense. So
Yeah.
Luxxfolio, for instance, if you are buying stock in Luxxfolio, and I'm not recommending anybody do anything, I'm not your financial advisor, but you'd be investing in a company that works with cryptocurrencies. They have the underlying assets of the miners. You could buy the miners on your own too if you wanted to, and you would have an asset that would have value. But if you go with a company like Luxxfolio, you would be investing. Dean, did I explain that well enough for people, or is there anything else you want to?
Yeah, no, I think you're touching on all the salient points there. I think there's this, we're sort of seeing this paradigm shift in the world that's kind of, transcending everything. And I think that there's a lot of people that are are sort of looking at cryptocurrencies, and they're sort of fearful of them, right? They're fearful of them because they're volatile. Are they going to replace my US dollars? How can that be possible? Who invented Bitcoin? All that, all those sort of conversations. And I think that when you're looking to buy or invest in this space, I think what I like about buying the companies is you're not only do you have exposure to cryptocurrencies, you've got leverage to exposure to cryptocurrencies. So, for instance, if a Bitcoin, is up 30%, the companies that produce those Bitcoins should be up, 100%. There is an inherent leverage there. In addition, you've got a management group in most cases, and I would say that, most of the publicly traded crypto miners now are professionally managed groups anymore. Because I think, when we looked at it in 2017, the market was kind of hot. It was sort of new. There was a lot of unsophisticated money, not only investing in it necessarily, but also operating those companies. And I think what you're seeing in sort of this second round of crypto miners is you've got seasoned management groups, whether it be actually as crypto miners or as finance people who are understanding that these cryptocurrencies, at least Bitcoin, Ethereum, they're places to store value. And I think last time we were sort of sitting there going, oh, you can't buy an ice cream cone, or you can't buy a pair of shoes with crypto. Oh, this stuff's no good. Now I think we kind of understand it a little better. And I think so. I think you're talking about investing versus speculating. I think that investing is definitely done with the miners, or the not just miners, but the companies that are sort of exploiting that underlying commodity, which is Bitcoin or Ethereum or whatever you might be interested in. So I think it's an important distinction you make there, Michael, for sure.
Yeah, and just to go off a little bit more with it, with mining, even if you get like ant miners, very wonderful miners like the S19, which we had mentioned about your previous press release. That mine, the algorithm is SHA-256. That can mine more than just Bitcoin. Should Bitcoin not be the most profitable one, it can mine Bitcoin Cash, it can mine Bitcoin SV, it can mine a couple other smaller ones. But my point is that if you were to buy one Bitcoin, you have one Bitcoin. If if you buy a Bitcoin miner or invest in a company that runs Bitcoin miners, you now have the adaptability to swap where you're pulling profit from to a larger amount of things. And when it comes to things like Ethereum, when you're talking about GPUs, it opens up even more massively. So in that regard, having it in the hands of professionals who know what is most profitable is better than trying to run it yourself, unless you are going to make it your full-time job. So as a passive
Yeah,
investment vehicle, companies that do crypto mining is better than doing it on your own, in my own personal opinion.
investing in the tools and investing in people who know how to operate those tools
Yeah.
and wake up every morning thinking about the execution of putting those tools to work is a pretty good strategy for success. I mean, you can all management groups make mistakes. They'd like to have things that they could take back. However, over the long haul, whether you're talking about managed money or managed crypto, I guess it's kind of one of the same now. But you're going to do better if you've got people that are minding the store in a way that you just can't do on your own. The other thing too is we like to talk about at Lux is that we painstakingly sought out partners that had things like cheapest power and all those types of things. So we are able to withstand corrections and all that type of stuff. I think if you just run out and buy Bitcoin, you're gonna, the volatility is going to be such that it's going to, shake a lot of people. And I guess speculating, if you're planning on holding it for the next 10 years, I guess you're not. That would be the way to invest in the crypto. But I think in the meantime, I think there's a super. When I look at all of the crypto miners relative to the price of the commodities right now, I think they're very, very good value across the board. I mean, when I look at up and down at the companies that I follow and admire, there's not many of them that I'm looking at right now going, oh my God, the valuations on these things are unbelievable.
Yeah.
They're quite a bit better than they were 2 months ago, even.
Wow. Yeah, I think what people need to realize is the ROI for crypto miners is higher than almost any other investment vehicle that I've seen.
Well, and
Yeah.
that's a big part of the Lux story is when our debt fund was underwriting the crypto miners in order to get them equipment leases for their actual machines. And we looked at it and we were like, wow, this return on investment is off the dial. Like, this is
Yeah.
really, really impressive. And that's kind of what kind of launched us into this, taking this tact in the crypto business. So yeah, you're absolutely right. There's a lot of great values to be had in this market right now, with Lux and our peers. It's just a great place to be.
Yep, agreed. All right, Dean. Well, thank you. So for everyone watching, whether you are investing in miners, buying cryptocurrency, speculating in any way you wish to, stay safe, do as much due diligence as you can, and hope you enjoyed the show. If you have any questions, don't be afraid to shoot them across to us. We'll be happy to answer them. Dean, any last words?
Michael, after we're off the air, you're going to play a little more guitar for me. How's that?
Maybe next time we'll write a
Oh,
little
okay.
song for Luxxfolio. Okay.
Okay. Good job.
All right. Thank you. There we go.